Hello, hello. So after a while, finally, we're having some good days here for Alibaba. It's actually up almost 6% right now, and at some point it was up even more. A lot of Chinese companies are actually up, sorry, today, including the index, of course. And in this video, we're going to examine what is happening and what we're expecting out of this. Is this going to continue? Are we looking at a temporary thing? What is behind this steep increase today in Alibaba and the Chinese markets? I am preparing a video in which I'm going to be talking about China in much more detail. But for this one, I want to examine what is happening that relates to Alibaba here. And let's take a little bit of a look. Why is Alibaba stock up today? You will see that it has been claimed that China's government might soon dial back its strict zero COVID policies, which have obviously really affected all the Chinese stocks. And if that happens, we are more than likely looking at some steep increase in the Chinese market that has been destroyed lately. It's been going down and down and down and down, and it has reached like 2005, I believe, levels. It has gone that much down that it has reached the levels that it used to be back in 2005. Insane. And so many things have been going wrong with the Chinese market in the past couple of years. And the Chinese government hasn't allowed the Ant Group IPO, for example. There have been issues with the strict zero COVID policies. There have been issues with government crackdowns, many issues between the US and China, and regulatory policies there and the audits. So many things going wrong for Chinese stocks and Alibaba as well. And this is why the stock price has gone down about 60%, as you'll see here, from its 1 year high, that is. And I believe more than 1 year ago, it was actually even more, significantly more, like $300 at some point. So it has gone down a lot overall, like super a lot, I should say. So much, really. And at this point over here at $67, frankly, I think that it's basically given away for free, especially when you consider that this kind of business is insane. And there's always the fear right now. But in the next like 10 years, for example, 5 to 10 years, I think this is probably going back up to where it was, if not more. We'll see, of course. Hopefully, we will be around. But you will see here that what has been happening is that, yeah, there have been these rumors, and those seem to be moving Baba higher. What I told you earlier about easing the strict COVID-19 policies. Now, it looks like the Chinese government has declined that rumor, but still, this is enough to actually allow the market to buy the rumor and then maybe later sell the news, which is what tends to happen a lot in the stock market. We'll see whether that's going to be the case, but at least for today, we are heading higher. And you will see here an interesting article that I was taking a look at. The market has no mercy on Alibaba. I thought this one was interesting because it talks about some about what has been happening pretty much in bullet points. Of course, I'm not gonna bore you with the whole article over here. But what I did want to point out is this very well known market cycle chart here, which you should be aware of, because that's what tends to happen with the market cycles. This pretty much is always the case. There's like the hope, the optimism, the belief, the thrill, the euphoria, and then the complacency as it's going down, anxiety, denial, and panic. And right now, and capitulation, of course. And right now, we are in these stages over here where, things are going down and then sideways and then up a little bit and then down a little bit. This is very typical for the bearish and bullish markets. This is super typical here. And I think this is going to be playing out the same way as usual. And then it's gonna be the disbelief, and then going back again to this to this point over here, and it's gonna go up again. This is super typical for market cycles, because when it goes down, when an instrument goes down, and people are basically trading on sentiment, it tends to go down even more. Cheap gets cheaper, even though it could still be a fantastic business, because it's about psychology. This is why this is the psychology of a market cycle. It's extremely important. Feelings are super important in the stock market, and traders are trading feelings, really, especially when we are looking at day trades or even weekly trades. It's not about the business, of course, because the business doesn't change in a single day unless something radical happens. But most days the business is exactly the same. What changes is the sentiment of people trading, and this is what takes it up or down. Now, imagine today, for instance, there is just a rumor that's taking Alibaba up like 6% or 7% without anything, frankly, really happening. No actual news, nothing actual happening. It's all about the sentiment here. Now you will see here that for 2 years there has been the steady flow of bad press concerning China, which we know about. The fact that Xi Jinping remains in office for the third term and there have been some loyalists pretty much as members of the government, well, people don't really like that because they think, and it's possible, that these people are basically yes men and they are going to be doing what Xi Jinping tells them and just not care about the markets. Could be happening, but I'm not sure whether the whole China will become less market friendly because remember, Xi Jinping has been there for a while. He wasn't appointed yesterday, so he was there when the stock market in China was thriving as well. And so it's likely, and I think it will happen eventually, that the market will go up again. Because that's what happens with market cycles. When things go down a lot, then they go up a lot. That's very, very typical. Now, zero COVID policy affected China's GDP growth, of course. And the author here says that it's unlikely that the idea of shutdowns is to purposefully handicap the economy, with which I disagree, actually. I think the purpose was to handicap the economy for a while. I think that's why this has been done, because obviously this doesn't really make any sense, frankly, the zero COVID policy, apart from the fact that China deliberately wanted to halt their economy for a while for various reasons, potentially even reasons that hurt the US economy and the supply chains, of course. The real estate bubble will put China in a recession. Now, anybody who invests in the stock market with a long-term view has to be prepared for recessions and big market declines along the way. Obviously, yes, and it could happen, of course. I mean, a recession in terms of the real estate in China for sure could happen at some point, but it could happen with everybody, really, in the US as well, for instance. We don't really know whether that's going to be the case, but in terms of the stock market, their markets, their indices have gone down a lot. And if you are not going to be buying right now, I don't know what's the best time to buy when we're looking at indices that are down back to levels that were happening back in 2005. It is it is insane, frankly. And possibility of China invading Taiwan. This has again to do with the well-known, pretty much sentiment stuff, the fear that has been generated from all this potential news here, negative sentiment piling up over here, companies being delisted, for example, human rights, regulatory actions, the VIE structure of Chinese companies. So many things here that have been piling up over the years, so many risks over the last couple of years, pretty much affecting investors and causing fear and causing this amazing sell-off, bringing the stock price at an amazing low over here. This is absolutely insane. And basically everybody and their mothers were dumping Chinese companies over here, which I think is a bad idea at these prices, like a really bad idea if you ask me. Now, if you take a look at the company right now and the stock price sitting at $67, it is absolutely insane. We're looking at a less than 8 price to free cash flow ratio. And we do know that their price to earnings has been a little bit higher because they haven't been having good results in terms of their net income in the last year. But that was a temporary thing, and it's not expected to continue in the upcoming years. And it's actually super, super interesting to see that if you take a look at our stock evaluation tool, remember that the company is also going to be buying back a lot of shares. But if you take a look at our stock evaluation tool and you use revenue growth numbers that are super low, something like 1, 2, and 3% over here, and net income margins that are typical for the company, the typical one for the company, again, is going to be about 20%, as you'll see here in the previous years. Again, last year has been the odd one out. It's not going to continue. So if we go like 19, 20, and 21 over here, and in terms of the free cash flow margins, again, something similar to 90 and 100. So the company does something of that sort, 90, 100, and 110, and an annual return of 13%. And we do this calculation over here, you will see that we are looking at a low of at least $120, which is double, almost double what the company is right now. Absolutely insane. We're talking about a 1% revenue growth for the next 5 years. So we're assuming that the company will grow 5%, or about 5% the next 5 years, which is insane. The company is going to grow more than that, and probably significantly more than that. And the margins could actually even be higher than 19%. More than likely, they will be higher than 19%, even, I think. But still, with these kinds of projections, take a look at this one. The current price is so low that it's basically just sentiment and all the bad reaction that is holding people away from potentially adding China to the portfolio, and I do understand it. There is fear around the Chinese markets, but for me, this is just such an amazing opportunity that I think it's insane not to be entering. Now, my cost basis is higher than this because I have bought twice. I have bought back when the company's stock price was at like 118, and then I bought again when it was like 80 something, 84, I believe, something of that sort. But my average cost basis is near 94, which I still think it's actually pretty great. But 67, that's something else. Absolutely amazing. But that's what I wanted to talk about in terms of Alibaba and China for today. Again, I'm working on creating a sort of like a video that's going to be sort of like a narration type video about China. Hopefully you're going to enjoy that. But if you are interested in this, and if you are not a subscriber, remember to subscribe, and please leave a like. That helps a ton. And I'll see you in the very next video. Thanks for watching. Bye bye.